Let's talk about the markets because, yes, that festive cheer did not really lift the spirits. When you talk about the action on the Lal Street, the Nifty today has fallen. It's gone below the 24,000 mark, and this after it surpassed 26,000. This happened just over a month ago. Stocks that were in focus, that were pulling the index down. Hero Motor was one, Grasim another. They were pulling the Nifty down to their level, the 2-month low level that we are seeing on the Nifty today after business ended. All sectors have ended in the red. In fact, realty was down the most, 3 percentage points cut. Then FMCG also was contributed to the losses. Metals also dragging more than a percentage point in trade today. Let's get a complete sense of what went down at the start of November, because it's a deep gash to begin the month on, at least the trading part of the month, coming back from the Diwali festivities. My colleague Ansh is joining us to get us a deeper understanding. Ansh, if you can tell us what went down in the markets.
Well, it was a bearish day on the market. Nifty touched 2-month low level. Also, if you see on chart, then Nifty was actually hovering between that 24,100 to 24,500 mark from last 6 to 7 session, indicating consolidation. But today, Nifty has given a decisive breakdown from this consolidation, indicating very strong bearish sentiment in the market. Also, if we talk about other broad indices, then mid cap also closed in red, while small cap has snapped its 5-session gaining streak actually. Now, if we talk about sector indices, then most of the sector indices closed in green, with Nifty Energy and Pharma snapping its 2-session gaining streak. Nifty Realty is down by more than 2%. Metal and FMCG is down by more than 1%. And especially Nifty Bank has slipped below that key support of 51,500 mark. So overall, it was a very bearish session.
Thanks for painting that picture about today's session in the markets. But let's get a sense of where the markets are headed. And for that, market expert Ajay Bagga joins us on Business at 9. Ajay, we hope you've had a great Diwali and you're coming back fresh. But look at the markets. What's your reading of the setup, as it were, now that FIIs seem to be intensifying their sell-off?
Yeah, Vikram, if you look at the global scenario also, China post the stimulus got a good amount of money, nearly $53 billion of inflows in 2 weeks. But in the last 3 weeks of October, China has seen outflows of nearly $15 billion. So it's outflow from emerging markets overall. Mexican funds have seen outflows with the fear of a Trump return to presidency hanging on that market. Latin American emerging markets have seen outflows. Asian economies have seen outflows. So one, it's a global phenomena. Where is the money going into? It's been going into US markets and Japanese markets. Even the bigger European markets have seen outflows. And if you look at what the markets have had to contend with in a political sense, you had underwhelming election in Japan, which raised a lot of uncertainty. But the markets interpreted it positively that Bank of Japan will not move that fast on raising rates thanks to this political uncertainty, and Japanese market continued to see inflows. We have had a UK budget which is raising taxes by 51 billion pounds, which is nominally a negative for the economy, for corporate earnings. And we have seen 42 weeks of outflows.
Ajay, I'm sorry, we seem to have a small glitch in our connection with you, and we'll try and rectify that. I'm sure you're still hearing us though. So my question to you is about the way the markets have been behaving. You said the inflows into the US markets is going up, but also when we've seen the kind of unsurety when it comes to the outcome of the Japanese elections, it's the same that we can say about the American elections. Then why are we seeing the inflows in the US markets right now? We don't seem to have Ajay Bagga right now. We'll try and reconnect with him. But essentially, if you look at the kind of fall that we've seen in the markets, and of course, we have been able to kind of get a sense of where this market is headed, because the way the financial services, especially the banks, how are they actually playing out right now? And there is a sense, our colleagues here at ET Now, Nikunj Dalmia, the editor-in-chief, he had a conversation with our friend who looks at the charts very clearly, Kunal Bothra, and the two of them were discussing that if the stocks within the entire financial universe hold out, then perhaps there might be a base formation and we could see a bounce back. Whether or not we can see that or not is going to be a big million-dollar question. But let me ask Ajay Bagga. Ajay, I was just telling our viewers about a discussion that took place here in the studios of ET Now, which is a belief that technical charts seem to suggest that at this is a crucial level, 24,000. But if the financials hold out, which of course we've seen a lot of weakness in recent times, but if they hold out in these volatile times, then perhaps we can expect a base formation and a bounce back. Do you see that happening?
See, if you remember, 24,800 was a very concentrated support level for Nifty, and it broke through that. Charts work till they don't work. I believe in fundamental analysis, but what little bit I know of technical analysis, these very strong support zones, when they are broken, it does not get healed that fast. But what I feel, Vikram, that the markets have discounted in a lot of weakness for the corporate earnings. Most of the disappointments of the second quarter are now reflected in the share price. Now, does it go down from here? Yeah, markets are always excessive. And until we see a stop to the FI outflows, you can't really have a bottom formation in the Indian markets.
But Ajay, you were also saying that there are inflows into the US markets. You mentioned the Japanese elections. The outcome was not known. There was this kind of indecision that was floating around. That too is the case in the US elections right now, because you said a Trump victory is perhaps what the markets are afraid of. There are certain people who believe that a Harris victory is what the markets are afraid of. But one wonders why there is inflow in the US markets when there is uncertainty.
No, the Mexican markets are afraid of a Trump victory. So there were outflows from the Mexican markets.
Right.
The US market is seeing a Trump trade, which is positive for the stock markets, which is higher bond yields, higher inflation, lower taxes, and less regulation, good for corporate earnings. That's the Trump trade that is on, good for cryptocurrencies. So you're seeing $1 billion a week coming into crypto ETFs, Vikram.
Yes.
So the Trump trade is very strongly on in the US market.
But tell me about the outcome of the American elections. They would perhaps reflect in the Fed's policy, because that's where the markets are getting nervous as well, how the Fed is going to move, and that would largely depend on who the next incumbent in the Oval Office is.
Yeah, and if it's Trump, then you could have a new incumbent in the Fed chairperson's office also very soon.
Exactly.
So that is there. 10,000 new appointments will happen with the change in regime. It's not like the Indian bureaucracy where the IAS, IPS, IRS, IFS stays in place and the politicians change. The 542 Lok Sabha politicians change and the Rajya Sabha. And the bureaucracy goes on and on. In the US, winner takes all kind of a market, Vikram. 10,000 new appointments will happen with a Trump presidency. With Harris, Obama, and Biden will largely decide who comes in. So there could be some continuity for some time, and it won't be so disruptive. So Trump presidency is going to be disruptive policy-wise. Now, what happens with the Trump presidency immediately? The biggest problem facing the US right now is the debt amount and the fiscal deficit. He's going to inherit a very good economy. Out of the last 4 presidents, Vikram, 3 have inherited a recession. So
Yes.
Biden in 2020, Obama in 2008, and Bush in 2000. All 3 inherited bad economies. Only Trump got a relatively good economy in 2016. And again in 2024, Trump or Harris inherits a good economy. But what are the 3 big things that the voters are talking about? First is economy. So the economy has not been equal for everybody. Asset holders have done very well. Stock ownership investors have done very well. Real estate owners have done well. but a large portion has not benefited from the surge in the economy.
Right.
Second is inflation, and third is immigration. And there, on all three, Trump scores higher than Kamala Harris.
So that is a moving piece for sure, and that's definitely going to have an impact on how our markets move, at least this week. But one belief is also that a lot of liquidity that we've been talking about, that we are not bad on the liquidity front in our end of the world, but it has been sucked into the many IPOs that have hit the markets. Do you agree with that?
Yeah. We've had new paper. If you see the promoter selling has been about 2 lakh crores plus in this calendar year. And IPO, FPO, QIPs and OFSs have raised another 220, 230, 2,30,000 crores. So nearly 4,50,000 crores has gone out in terms of new paper. DIIs have put in nearly 480, 490, 4.9 lakh crores in the market. So they have absorbed the paper, plus the retail Indian investors. FIs have contributed a very minuscule 17,000 crores in this whole, the supply of paper. So that has been a drag. And the second thing is, Vikram, normally when you see such a huge outflow, like we saw in October of 1,14,000 crores in the secondary markets, when you see such a large outflow, in the following months, normally on a flow sense, you see a reversal because you can't really, the market will not be able to absorb. Even the ammunition with mutual funds would have got exhausted to some extent. So if the FIs press another 1 lakh crores in November, then there is no level for the market. It can fall very sharply. We saw that today in terms of FI selling being higher than the DI selling, and we saw the sharp correction in the market. So as the DIIs take a back seat and they let the FIs sell, you could see markets correcting faster, and that will be a self-healing process. Normally,
but it could be a long self-healing process, right?
No, it will be faster. Because DIIs, when you keep on absorbing, you give an exit to the FIs.
Right.
When, what happens? I have worked in foreign companies, Vikram. A Frankfurt or a New York will send you an order, everything must go. They are not bothered. I have run domestic funds. When we would be selling, we'll be very careful that we don't move the markets.
Right.
While the FI, when the order comes from head office, it's everything must go, generate this liquidity. They are not bothered about the impact cost.
Right.
That is the big difference. So when you keep on giving them an exit, it's a slow cut.
Right.
But when DIIs don't have the ammunition, they stand back, you will have such a sharp impact cost that the market becomes self-healing and the valuations all of a sudden start looking good.
Right, but can you say that about the auto sector? Because that's a key consumption theme, and very quickly, if you can address that, because the October dispatches seem rather muted. So if festive cheer doesn't seep into auto sales, then how should we read into the sector's performance? So what do you bet on? The defensives? Where do you go?
Defensives, you're spot on. You'll have to see areas where you can see growth over the next 1 year, 2 years. I think in terms of what will happen to a large extent over the next 5 months, including November, government spending will increase. That will lead to a multiplier coming back in the economy. Consumption, you will see recovery happening. Infrastructure, more projects coming in. And consumption will, with a lag, start picking up. You have 35, 40 lakh weddings coming up from 12th November to the end of December. You'll see nearly 40 lakh weddings in India. So you are going to see 6 lakh crores of consumption coming on the back of that. So is that enough? It is not. We have lost 6 months, and the EPS for Nifty has been downgraded by 2 to 3% for this financial year and the next. So that cut has come in already, but we are expecting consumption to pick up. So a contrary bet would be buying staples right now, buying durables right now. Auto, I think two-wheelers is better. you are seeing rural recovery faster than the urban recovery, and that is quite well correlated to autos with two-wheelers. So I would say two-wheelers rather than passenger vehicles. Commercial is in a different cycle. I think that will take more time.
Right. So, I mean, looking at that consumption theme, how quickly can they really pull things up in the markets, in the economy? That remains an important ask, and we keep going back and circling into that question. We will continue having this discussion on the markets, Ajay, but it's always a pleasure getting your perspective. Thanks very much for joining us with your insights on Business at 9 tonight.
If you like this video, then like, share and subscribe to ET Now.